two memory stocks, both up triple digits this year, both selling out their AI supply for years in advance. But only one of them is the smarter trade from here, and the answer might surprise you because it's not the one that's been running the hardest. Welcome back. Last episode, I broke down the AI memory supercycle and why SanDisk, ticker SNDK, has been the breakout story of 2026. Today we go one level deeper. SanDisk versus Micron, ticker MU, head-to-head. We're going through 5 categories: business model, growth rate, valuation, technological moat, and risk. And at the end, I'll tell you which one I think is the smarter, risk-adjusted bet from here. If you find these breakdowns useful, the like button helps the channel a lot. Let's go. First, what do these companies actually sell? Because despite both being called memory stocks, they're not the same business. Micron makes both DRAM and NAND flash. DRAM is the volatile high-speed memory that lives next to the processor. That's where high bandwidth memory, HBM, sits. HBM is the rocket fuel of the AI trade. Every NVIDIA data center GPU has stacks of it. Micron, Samsung, and SK Hynix are the only 3 companies on Earth that make it. SanDisk, on the other hand, is a pure NAND flash company. NAND is the storage memory that holds data persistently. When you power off your phone, the photos stay because of NAND. In data centers, it powers enterprise solid-state drives. Why does this matter? Because HBM is the higher margin, more strategic AI product. It's silicon intensive. One HBM wafer eats the capacity of 3 standard DRAM wafers, which means scarcity is structural. SanDisk's NAND is critical too, but it's traditionally closer to a commodity. Round 1 goes to Micron. Better product mix, more AI leverage. Why does this matter? Because HBM is the higher margin, more strategic AI product. It's silicon intensive. One HBM wafer eats the capacity of 3 standard DRAM wafers, which means scarcity is structural. SanDisk's NAND is critical too, but it's traditionally closer to a commodity. Round 1 goes to Micron. Better product mix, more AI leverage. Cloud memory revenue alone? Up more than 160% year over year to $7.75 billion. Mobile and client memory? Tripled. Here's the line that should be tattooed on every memory investor's brain. Micron has stated, publicly on the record, that their entire calendar 2026 HBM supply is sold out. Already, including their next generation HBM4 product. SanDisk's growth is also strong. Record sales last quarter, $42 billion in long-term contracts. But the growth rate doesn't quite match, and more importantly, SanDisk's growth came from price and product mix, not from volume. Micron's came from both. Round 2, Micron, decisively. Now this is where the round flips, because if Micron is the better business, you'd expect it to trade at a premium. It doesn't. Micron is trading at roughly 11 times forward earnings. 11. The S&P 500 trades around 21. Software companies trade at 30, 40, 50 times. A company growing earnings at over 200% year over year is being priced like a value stock. SanDisk, meanwhile, has run so hard that the multiple is much more demanding. After a 500% year-to-date gain, you're paying for perfection. Here's a stat that floored me. Micron's PEG ratio, that's the PE ratio divided by the growth rate, is around 0.07. Anything under 1 is considered cheap. 0.07 is, mathematically, one of the cheapest large-cap stocks on the market relative to its growth. Round 3 is a knockout for Micron. Round 4, moat. How defensible is each business? Micron is one of 3 companies in the world that makes HBM. That's it. 3. Samsung, SK Hynix, and Micron. Building a new HBM fab takes 3 to 5 years and tens of billions of dollars. The barrier to entry is functionally absolute on any reasonable time horizon. And Micron is now a confirmed supplier for NVIDIA's next-generation Vera Rubin platform. They're shipping HBM4 in volume. They're already working on HBM4E for 2027. Ignan Tao. SanDisk's moat is real, but narrower. They are co-developing something called High Bandwidth Flash, HBF, with SK Hynix. The idea is to use NAND the way HBM uses DRAM for AI inference. If it works, it's a massive new market, but the word there is if. It's still optionality, not yet a proven revenue stream. In NAND itself, SanDisk competes with Samsung, SK Hynix, Kioxia, and Micron. More competitors, lower margins, faster pricing decay. Round 4 to Micron, wider moat, harder to replicate. Final round, and this is the one most YouTubers skip. Risk. Micron's biggest risk. DRAM inventory buildup. Memory cycles have peaked many times before, and the warning signal is always the same. DRAM inventory starts climbing quarter over quarter before pricing or margins ever crack. Watch that metric on every earnings call. If it builds 2 quarters in a row, the cycle is rolling over. SanDisk's biggest risk, pricing power evaporating faster than expected. The fourth quarter guidance already implied pricing is decelerating, and those $42 billion in long-term contracts, they were signed at fourth quarter 2026 economics, which means SanDisk capped their own upside if NAND prices keep climbing. Both stocks are stretched technically. Both are priced for things to keep going right. The difference is that Micron has more margin for error built into its valuation because it's not trading like everything is already perfect. SanDisk is. Round 5, slight edge to Micron, just because the entry price gives you more cushion. So here's where I land. On a 5-round comparison, Micron wins on business model, growth, valuation, moat, and risk. SanDisk has been the better stock so far this year. That's just true. But has been is not the same as will be. Past performance is not future return. SanDisk has already priced in a lot of good news. Micron somehow hasn't. If I had to choose one to own from here, not the one that's run the hardest, but the one with the best risk-adjusted setup, I'd take Micron. Lower multiple, wider moat, broader product reach, and the confirmed NVIDIA supplier relationship. SanDisk is the higher beta play. Micron is the higher conviction one. Next major catalyst, Micron's fiscal Q3 earnings, expected around June 24th. Analyst revenue estimates range from $33 billion to over $40 billion. That spread tells you nobody actually knows how fast this is accelerating, which is exactly why the stock is mispriced. This is not investment advice. I am not your financial advisor. Do your own research, size your positions appropriately, and never bet money you can't afford to lose. Dings nuts. If this breakdown helped, hit the like button. Subscribe if you want the next one. We're going to look at the third leg of this trade, the one almost nobody is talking about. The picks and shovels play in memory equipment makers, the companies that sell the machines to Micron, SanDisk, and Samsung. Some of them are up even more than the chip makers themselves. I'll see you in the next one.